Welcome to this explainer. Today, we're diving straight under the hood to break down the absolute powerhouse Q2 2026 financial performance of RTX Corporation. Formed by that mega merger of Raytheon and United Technologies, RTX is just a titan in everything from commercial aviation engines to crazy advanced military tech. And guys, their recent numbers, literally spectacular. Let's get right into it. So before we even peek at the quarterly earnings, we've got to talk about this staggering number. $289 billion. Just let that sink in for a second. That is RTX's record-breaking backlog as of Q2 2026. To put that into perspective, it's up 22% year over year. We're talking $170 billion in commercial orders and another $119 billion in defense orders. Basically, this one metric guarantees them multi-year revenue visibility. It lays a rock-solid foundation for literally everything else we're going to discuss today. All right, moving into Section 1. Q2 2026 financials, a blockbuster performance. Now, analysts went into July 23rd expecting adjusted earnings of around $1.66 per share, while RTX completely blew past those expectations, delivering an adjusted EPS of $1.89. That's nearly a 14% beat on the bottom line. It's a clear-cut signal of some serious operational efficiency happening behind the scenes. And the broader financials? Just as impressive. Revenue jumped a stellar 14.5% year over year, hitting $24.71 billion. Again, easily cruising past Wall Street estimates. But honestly, the standout figure for me is that middle one. RTX generated a massive $2.9 billion in free cash flow, while driving net income up to $2.14 billion from $1.66 billion just a year ago. I mean, this is a company generating serious, unencumbered cash. It gives them all the agility they need to heavily reinvest in R&D or, comfortably reward their shareholders. So, riding this incredible wave of strength, RTX went ahead and significantly raised its full-year 2026 outlook across the board. They bumped their adjusted sales guidance to a whopping $95 to $96 billion. But really pay attention to that organic sales growth. They are now confidently projecting 8 to 9%. That's a huge jump from their previous forecast of just 5 to 6%. It shows just how much confidence they have in their near-term pipeline. Plus, adjusted EPS is targeting the $7.10 to $7.25 range, and free cash flow guidance lifted to as high as $8.75 billion. They are telling the market loud and clear this momentum is here to stay. As their CEO, Chris Callio, summarizes right here, this combination of 16% organic sales growth, margin expansion across all three of their business segments, and just robust demand, it really paints a picture of a company firing on all cylinders, right? This isn't just one lucky division carrying the weight. It's systemic, company-wide growth, entirely fueled by that staggering 22% jump in their backlog. Okay, let's pivot to Section 2, Fueling the Engine, Major Contract Wins. To really understand the why behind all this crazy growth, we have to look at the rapid-fire contract wins that are actually fueling the engine. August 2026 alone was an absolute banner month for RTX. I mean, in just a matter of weeks, they locked down nearly $2 billion in major individual contracts. We're looking at a huge $745.4 million contract from the Missile Defense Agency for the SM-3 Block IA. That's an advanced ballistic missile interceptor for both the US and Japan. Then there's a $536 million modification from the U.S. Army for the Tau weapons system, a super effective anti-armor missile. And let's not forget their subsidiary Collins Aerospace, pulling in $472 million for U.S. Army Chinook helicopter modernization. Seriously, this is high-velocity contract acquisition across multiple, highly specialized defense domains. But here's the absolute crucial point. It is not just about one-off wins. If you add to those August numbers a sweeping 7-year framework agreement signed with the Pentagon and Boeing, well, that's a whole different ballgame. This agreement is specifically designed to ramp up production of SM-3 missile components, like avionics and ejector assemblies. When you lock in an agreement for 7 solid years, it gives a defense contractor like RTX crystal clear long-term demand signals. It basically empowers them to safely invest capital and physically expand their production capacity without worrying that demand is just going to suddenly dry up. Moving right along to Section 3. Pushing boundaries in defense technology. So, beyond just churning out existing contracts, RTX is actively securing its future by pouring money into the absolute bleeding edge of defense tech. For example, let's look below the surface. In August, alongside Composite Energy Technologies, Raytheon successfully demonstrated the undersea launch capabilities of HADALUS. What's HADALUS? It's a highly capable, low-cost, long-endurance unmanned undersea vehicle built for the U.S. Navy. It can handle detection, reacquisition, and engagement missions. By proving out these unmanned platforms, RTX is opening up entirely new, asymmetric tactical possibilities for modern naval warfare. It's really fascinating stuff. And back above the surface, we're seeing some massive milestones in naval vessel modernization too. Raytheon recently delivered and installed the very first SPY-6 radar array, which is a critical next-gen air and missile defense system straight to the U.S. Navy's Surface Combat Systems Center over in Virginia. This delivery officially kicks off an intensive testing phase for Flight 2A destroyers that's going to run all the way through mid-2028. It is a perfect example of how their tech is becoming absolutely central to the next generation of fleet readiness. Now, having this kind of technological edge, it translates directly into massive global demand. Get this, RTX booked over $10 billion in international awards in just the first half of 2026. $10 billion! That is more than double what they did the prior year. And a huge chunk of that, over $7 billion, came directly from European customers who are, quite frankly, aggressively bolstering their air defense right now. To keep this momentum rolling, RTX is actively reinvesting, dropping another $100 million just to accelerate the testing of LTAMDS, their advanced 360-degree air defense sensor. Which brings us to our final section, Section 4, the Wall Street Verdict. So, with record backlogs, these major multi-year contracts in deeply entrenched cutting-edge tech, what does all this actually mean for investors? Well, the immediate reaction has been a tremendous surge in their stock. Over the past month, RTX stock has climbed 14.1%. That severely outperforms the broader aerospace and defense industry, which only gained 8.2%. And it absolutely crushes the S&P 500's 2.9% return over that exact same period. Oh, and they also declared a quarterly dividend of 73 cents per share, which is a nice little reward for anyone holding the stock through this massive run-up. But you know, the current landscape perfectly highlights a really interesting dilemma for investors right now. On one hand, analysts are incredibly bullish. The consensus rating is a solid buy, with Citigroup recently jacking up its price target to $240. Options traders are super bullish too, buying up roughly 4 times the typical daily call volume. But, on the other hand, valuation tools like Guru Focus are waving a yellow flag. They estimate the stock might actually be trading about 45% above its intrinsic fair value. So that elevated valuation definitely creates a real risk for a pullback. Look, RTX is undeniably dominating global aerospace and defense right now. There's no getting around it. The company is exceptionally well positioned to benefit from increased global defense spending and this massive push to rebuild allied missile stockpiles. But it leaves us with one final, absolutely crucial thought for you to ponder today. When a company is sitting on a near $300 billion backlog, surging demand, and has just seen a historic run-up in the market, is all of that phenomenal future success already baked into the stock price? Think about that as you track this defense giant in the months to come. Thanks for hanging out and learning with us today on this explainer. And as always, keep questioning the data.